New York City. Thanks for being with us on this record-setting Monday. We have three to talk about. Big three. Three stocks, three charts, three trades. We're ready. Ben Lichtenstein will take us through the charts. And here to take us through the trades, Scott Bauer, CEO of Prosper Trading Academy. So glad you're both with us. Scott, I know you're focusing on one of my kids' favorites, Mickey D's, McDonald's.
Right.
Tell me a little bit about the McDonald's story. It's a pretty decent chart as I was looking at it.
It really is. And in their last report, they said that third quarter sales were over $6 billion ahead of last year and 14% over same period last year. And, the big thing is during this period of inflation, during this period of higher prices, when everybody is getting so price conscious, they were able to pass on their higher costs to their customers. Maybe that's not good for you and your kids and for all of us, but they said that their average check rose, during this period. So they are finding success there. So I think this little dip that we saw off of earnings that we saw last week or so, that was a buying opportunity. The stock has recovered fairly nicely now, and in my opinion, is absolutely ready to break out to all-time highs here. I look at this chart. I just love it. The pricing power there is unmatched in that industry, in my opinion here. And I just love the look of this chart for a breakout.
Yeah, and I think you make a great point on something that we follow, Ben. You know this, how we really always note on any kind of food, right? Casual dining. How much was the check? And that's a big point that you made, Scott, because people are going there and they're spending more. Ben, your thoughts on this chart that we're seeing this upward action. It looks pretty great.
It sure does. Good morning, guys. I couldn't agree with Scott more. I am really anxious about talking about some of the price activity we've seen, the bid activity, and let's dive into the 1 minute time frame first and foremost, the most granular, so it can show you why I'm McLovin some of the price activity, the bid, the recent run up, and as Scott mentioned here, we're near these all-time highs. Let's take a look first and foremost at a couple patterns that I've brought to your attention a few times, and your viewers, Nicole. This high conviction run up, sideways consolidation, in this case very bullish, supportive of the trend that we've been seeing so far this morning, all the way up to, just shy of 250, and no rejection of these upper levels. Now, again, I don't usually get as granular as the 1 minute time frame, but I did want to just kind of speak to some of the strength we've seen over the last couple days. Now, Scott mentioned it's not just the last couple days. Basically, since earnings, we've been seeing this strength. And again, we were just looking at the 1 minute time frame, but here you can see it on the 5 minute as we get more into the intermediate time frame. The high conviction move up, sideways consolidation, and then again, it repeats itself once again. You can see the well-defined upper, lower extreme in the most recent range that we're in, and again, 250 to 248. This is just a look at the intraday. Take a step back from the granular look. You're going to see that, if higher today, 4 in a row, a nice move off some support here around the 236 level. And I want to point out, again, that, keep an eye on the 250 level. There has been a bit of resistance, or it's struggled, I should say, to get up above this area. But, Nicole, Scott, when I look at this one, and I can understand why investors are getting excited about this. This has been a McFlurry of price activity, this movement to the upside, high energy, high conviction. And, yeah, I'd agree with Scott here. It seems poised for a breakout at this point.
Right. You like that high conviction. Scott, I want to hear more about your trade. That's good stuff, Ben, as you're showing that to us versus the 50-day moving average. Scott, what do you make of it?
Yeah, I love the breakout here. I don't know that I can be as eloquent as Ben was in some of those descriptions, but what I'm looking at here is the December 10th expiration. Gives us a little bit over a month or so. The 265 call spread, just plain vertical bullish call spread, $10 wide. You buy that for like $1.30, $1.35 or so. I think the reward to risk, the McValue on that, if you will, Ben, is actually just fantastic, because if this thing does break that resistance that Ben was talking around, the 250 level or so, it's going to take off, in my opinion. So it's a $10 wide call spread. Costs about $1.30. That's your maximum risk on this thing. Can go to $10. I really love the upside here.
All right. So what do you think of that, Ben, as you take a look at his trade?
I think what we want to see if we get the breakout at this point, and again, we still have yet to see that. I always make it real clear that should we get one, Nicole, Scott, a breakout's not as significant as it may seem. What we want is high conviction, follow through. I always say energy, participation, and ultimately we want to see some form of acceptance of the new upper level, which comes in the form of some consolidation and that sort of sideways sort of range building process. Now, when I see high conviction in terms of what we've seen since earnings, the last 4 days up, I think, again, it does lend itself to a breakout, but this is going to be key to watch. If we do get one up and through the 250 level, do we have those components? Again, the energy, the follow through. Are we seeing participation? And ultimately, can we hold that new upper level? It's basically, if we get a breakout, it's the market telling us that we're seeking value at a higher level. The question at that point is, do they find it?
Absolutely.
Yeah, it's pretty amazing, especially from that low that we saw all the way back in March, right? If only hindsight's 2020, if only it had gotten in there around $200, could have really killed it. Scott, you had some more thoughts on McDonald's.
Yeah, I just want to continue what Ben was saying. If it does make that breakthrough, what we look for then is that 250 area, which has been major resistance, to then become support. So that's what we would look for. And if it does become support, then I think you can be primed for a nice run higher.
Right. And that's how the charts work. That's exactly what we look for. Let's turn our attention to another name, and that is Take-Two Interactive. The chart is an interesting one. The story is one. Over 1 month, it's up, it looks like 16%. But they've had a couple of different things. The Grand Theft Auto story, there was a delay there. That's not great news for the company. They did get a nice pop on the news that they're partnering with Facebook on Grand Theft Auto using the Oculus Quest. So there's been good and bad headlines that have been moving this stock around. Scott, what are your thoughts on this one?
Absolutely. And as you just mentioned, Nicole, back in September, we saw a downgrade in the stock because there was news out about the delay of GTA here. But then we saw a nice little pop with the news at the end of last week with their partnership with Facebook. So very similar in terms of what I see with McDonald's here is there's some pretty stiff resistance here at 186 or so in Take-Two. If it can break through, if it can, and earnings are this week, so it's obviously a big wild card, but if it can break through, I easily see 200 in this stock. The market maker expected move, they're pricing in a move of about $12 to $13 or so, which would put us right about at that $200 level or so. So what I'm doing, there's a strategy, a calendar type of strategy where I'm buying time and I'm selling a near-term call, a call expiring this week, the 195 strike call, and I'm buying one 2 weeks out. So basically you can look at it as the call that I'm buying on November 19th, I'm financing it by selling this week's 195 strike call. And I really like that setup because there is a massive implied volatility disparity between this week's option and the one 2 weeks out. Now, we do normally see that heading into earnings. We do normally see that. But I really like this momentum here. And again, this is an if it can break out from that resistance at 186 here, this type of spread, this has the potential to really expand greatly here. And you can buy the spread for under $1, probably somewhere around 90 cents or so.
This certainly seems like a fun way to do this with this call spread and having the calendar in your favor, or at least trying to use it in that way. Right, Ben?
Oh, completely. And in terms of what Scott just said, I'd have to agree with a couple of the terms and his all bullish standpoint from this one. He used the word momentum, and I think that's where I'd like to begin because we certainly have seen some. I think the hourly time frame really speaks to that momentum, that strength and trend environment to the upside. High energy conviction, high energy trade all the way up to 170 from the 145 level, and that's when we went sideways. We talked about this pattern a minute ago, the big move up, sideways consolidation, acceptance of the new area of value form around 182, and this is the hourly. This is a good look at the month of October and some of the bid activity that Scott was just speaking to. But I wanted to point out on the daily time frame, a couple hurdles to get up above here. You can see how, well, the 190 has been a level of resistance that Take-Two's run into basically since March, April of last year. They gapped down, if you remember, back in February of last year. And then, again, we're kind of just a bit of a chop since, but recovering nicely off the 144 low and a weekly look here shows it's not just a level to the upside to contend with in terms of 190, and should they get up above that, ultimately 214, 215, but also look at how the downside, Nicole, Scott, we've got some pretty well-defined support around this 150 area. Again, I think if we can take out this 190 level, a resumption of that move here. We talked about how, well, we've got three key areas, remember, associated with a balance. You've got the lower extreme, again, support around 150, the upper extreme, the highs up around 250. But look, that 191 area, 80 area coincides with the middle of this range. Energy, conviction through that area lends itself to a retest of the 215 area. I like this one. I like the energy we're seeing into the beginning of this week here, and I like the bid activity we've seen throughout the month of October. They've got some hurdles, though. Again, the 190 level is what the bulls want to see this one take out in the near future.
Yeah. All right, so let's move on to our third one, PayPal. And if you're a fan of the company or you would have bought it at any price, you could get it at a cheaper level right now because it has pulled back over 3 months, down about 15%. Scott, what are you thinking here? Because sometimes even great companies, it's hard to really truly understand where they should be valued. PayPal's an exciting one, particularly going into the holidays. And also, gentlemen, you know that August, September, October notoriously are a little weaker for stocks. Now we're getting into November, December, January, maybe some good moves to the upside. But what are your thoughts, Scott, as you take a look at PayPal?
Yeah, and I think, Nicole, of the three that we're talking about, this one is the riskiest. I think there's a great upside potential here. But as you said, even with a great company, and even with a company that, it makes sense that you would see positive momentum, you just never know. I love the buying opportunity, though, but I would only do this completely risk defined. The stock is down about 25% or so from its all-time high. Earnings next week. And then, on top of all that, there was so much confusion in the marketplace about the news with them and possibly buying Pinterest. The market didn't like it, and then they called it off, and the stock still is kind of under some pressure here. But I really love the opportunity here. So what I'm doing is I'm selling next week. So this is going to incorporate earning. Next week's 225, 215 put spread, $10 wide. I can collect about $3 for that. Now, reward to risk-wise, maybe it doesn't seem that it's the best reward to risk. But the way that I look at this is if the stock got down to the 220 area, or in this case where the break even is 222, I'm a buyer of the stock anyway. I absolutely want to own the stock there. So I'm trying to take advantage of some expensive option prices, selling a put spread. It's not a naked put, it's a put spread. So my risk is defined. And if it drops beyond that 222 break even, okay, I'm fine owning the stock there. But I can collect a nice credit for this. And I think, as you said, to your point, Nicole, these last 2 months of the year here, we're going to see a big uptick, probably not just in their bottom line, but also the amount of users that are using PayPal.
All right. And Ben, your thoughts?
Well, Scott and I sure seem to be on the same page today in terms of the big three. Nicole, PayPal definitely coming under pressure, the weakest link in terms of the chain that we're talking about today. And I've got my eye on the hourly time frame, almost a different, identical mirror image of what we've been talking about in terms of McDonald's and some of the bid activity that we've been seeing in Take Two. A well-defined trend lower here recently, coming off that 312 level, and a couple key areas of consolidation that formed on the way down. I think, again, in terms of what Scott was talking about as far as possible support around this 220 area, I like that. But, again, there's just too much momentum coming into this for me to kind of be willing to step up at this point. Let's just go back to that hourly. I'd be looking for us to kind of take out some of the key areas that were established on this kind of staircase pattern to the downside. But I do like the well-defined trend. I like the fact that, again, as we go back to the daily, we've got a well-defined lower extreme. I think if the bulls are in charge, which it seems that they have been, the most recent tests of this 220 area, that we should see them step up in the near future. But I want to stress that, again, they really need to step up at this point. Take a look down. Looks like 9 days in a row, if lower today. And I also just wanted to point out in terms of PayPal, if you look at the weekly time frame, now one thing that I want to mention, talked about that breakout in terms of potential, I should say, breakout for McDonald's, and how a breach of the upper level wouldn't be as significant as follow through and a new area of consolidation forming. I think, again, similarly, a 220 breach of that level wouldn't be as significant as a breach of this 180, we'll call it 190 area, because you can kind of see that staircase to the upside. Yeah. This is the most recent sort of level to watch, but certainly testing key support at this area.
Wonderful to see you both. Thank you for the big three. Ben Lichtenstein every single day. Scott Bauer, Prosper Trading Academy. Nice look at McDonald's, Take Two, and PayPal today. Thank you.
Thanks, Nicole.
Thank you.